Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. And this is the weekly stock market analysis show. And this analysis for March 7th, Monday 2022, the week beginning from Monday tomorrow, right? So, without wasting time, let's get into and see what exactly happened in the markets. So, this is a chart for the Nifty and the Bank Nifty that you see here, the weekly charts. And what you can see the last week. Candle has gone down. It's a kind of an inverted hammer, not really. The body size is little more than a small body, you can say, but it looks like a inverted hammer. Inverted hammer could be an indication that a reversal of a trend towards the upside. Right? Need not necessarily be. Right? Inverted hammer sometimes could change the ongoing trend. And weekly candle for the Bank Nifty right side, you can see a wide range bearish candle. That's what it is. You can see that both are at a double top M pattern neckline, double top M pattern neckline, right? 50 and the Bank Nifty both, right? So there is a chance for a change in polarity, of course, because this is a breakout zone, it is a resistance that is acting as a support now, right? This is a breakout zone, this is a resistance that is acting as a support now. So change in polarity bounce is possible, and inverted hammer indicates possible for the Nifty also a change in the trend, right? So, but overall, it is bearish move that happened the last week. How much was lost? 400 points lost in 2.5, and that's 2.5% of fall from the previous week. And Bank Nifty, it is a bigger loss. It's 2,000 points. That's 5.5%. So Bank Nifty performed really bad. You can clearly see that from the bearish candle. So the Nifty previous week it made a new swing low. Right, the previous swing low was broken, and it is closed at this almost the same point, but actually it has made a new swing low. Right, so that low is broken. That's something that happened in Nifty, and you can see that in the it's not indicated in the last slide. You can see that there is a 50-week moving average. That means the moving average in the last 50 weeks, 52 weeks makes 1 year, right? So last 50 week, what is the moving average? It has fallen below that and closed and resisting below that. That is something that you have to make a note of. Anyway, it has lost the daily 20 moving average. That's anyway below that. But 15 weekly moving average also, it has dropped below, closed below that, and is resisting there. And the double top and the CAP points I already talked. Bank Nifty, after losing 2,000 points, what has it done? It is clearly bearish candle, and also it is also resisting below the 50 DMA, the week WMA. That's weekly moving average. 50 weekly moving average, 50 weeks of moving average. It has gone below that, right? So that is again a bearish indication. A double top level is there. So critical level is a 34,000 neckline, right? Critical level for the Nifty is 5,900 neckline of the where a bounce can happen or a breakdown can happen, which is Fibonacci 61% retracement level also for both indices, 34,000 and 5,900, right? So latest Nifty daily candle, if you see, it's a red small body. You can say this is a daily candle. You can see it's not a spinning top, it's a small body, but it is red, and what it has done is a V-shaped move. It's tried to bounce up from here previous week, and then bounce continued for 2 days only after it broke down, right? So same thing happened. It bounced up from the support zone and then could not sustain it and fall back. That's exactly what happened. So daily it's a small body, right? Still below the 200-day moving average on both indices, and the main thing is that it's the bounce failed in the daily. It's clearly seen that the bounce failed in the last 5 days. Right? Last 5 days, the bounces clearly failed, and also there is a big resistance of a window gap. Right? It has fallen off, and there is a gap of 300 points and 600 points in Nifty and Bank Nifty, respectively. Right? So that gap remains a big gap, which would act as a heavy resistance on the upside. There last week also it was there. This week it has not come over. You can see that gap in this diagram, right? So before moving to that, let's see the Bollinger Bands. So Bollinger Bands, you can see that it is a breakdown that has happened with price moving on the lower band side, and expansion also has happened, which on the upper band as well on both indices, which is the reason for the high volatility that is happening. And so highly volatile bearish move is what the Bollinger Bands are indicating for both the indices. Now support resistance zones, make a note, right? Here you have this box, that is the gap, window gap, which is a heavy resistance for the upside on the Nifty. So support zone will be the gap support major, where it is currently 16,150, 16,200. It's a previous gap support. The gap seems to be covered by now. right? But it still remain at a support zone since it was close above that. So below that you have the 15,950 Fibonacci 61 retracement levels, which is what we have to keep a close watch on. Below that you have 15,500 and 15,650. That zone is also a support zone, previous support zone. Resistance on the upside would be 16,350, 450, which is Fibonacci 50 level. Above that 16,550, 16,650 level. Then above that you have 16,700, 750. Then at 16,800 to 900, Fibonacci 38. And then 17,000, 17,050, 70,000. That's the end of the gap also. That will be crucial to watch out. If it is able to move upward, means it has to move above the 17,000 levels, close above that green. And below 5950 should not be broken. Otherwise, so basically you are seeing that it is it is comfortably sliding down in a trend line channel. Right, clear indication of bearish move. Bank Nifty, if you see that it gets at a support zone of 33,600 and 34,100. Fibonacci 61 is not broken yet fully. Fibonacci 61 comes near to 34,000, so we have to keep close watch on this level. Below that you have 32,400, 32,800 levels support, and below that you have 31,800, 32,000 levels. And resistance on the upside, the immediate would be 34,750, 34,350, 750, that's one. Then 35,000 Fibonacci 50 retracement levels, so that's major resistance. And above that, you have 35,600, 35,900 levels. So that is near to 36,000, that's a major resistance. And above that, you have 36,800, which is Fibonacci 38, it's also major resistance. Then you have the major gap that is front fill, which is coming at 37,000 kind of levels. And above that, 37,500 Fibonacci 23 retracement zone. So any up move can only be identified if there is a close above the 37,500 levels, right? So below 34,000 breaks means there is a major upside, downside that can happen, right? So keep a note of these two levels, these levels on the Bank Nifty also. The momentum and trend analysis, if you see, Nifty has a bearish momentum, right? You can clearly see that it has gone to the bearish momentum last week, and bearish momentum on the Bank Nifty also is clearly seen, right? So but on the medium term, this is the daily charts, but on the weekly charts, it is still sideways. But short term, it is clear bearishness, and also it has got a bullish momentum, bullish divergence. Momentum divergence is there. You can see that the price is coming down and the momentum is rising up. Price Nifty also, Bank Nifty also, price is coming down, momentum. So that's a divergence. So there is a possibility that it can climb back into the bullish. It can climb back to this, near to this gap. It can climb back to just below this gap. That much of up move can be expected. That even then it is, we cannot say it's bullish, because it will be right below the, right inside, get trapped in the gap. But that much of movement can be possible, and again it can slide back in the channel downside. It's possible, right? But there is it's unconfirmed, right? It is unconfirmed. It will be confirmed only if you see a movement from the swing low to the upside. So it is unconfirmed, but there is a potential of. So there are positive factors also. It's a support zone, so a bounce can happen. That's a momentum divergence, bullish divergence is there. Supports are there downside. Fibonacci 16 retracement support is there. All of positive things are also there, while charts are clearly saying that there is a downside. Bearish charts is what you are seeing. So momentum is clearly bearish on the short term, and the divergence is there, which is positive. So ADX clearly bearish. Right? You can see that the ADX DMI negative is on the indices, both short term and medium term also it's weak. So the thing is that the strength of the bearishness is increasing. That's what the green is indicating. That's it's a rising bearishness is what you are saying. So trend and momentum down, right? Bearish on short term, and trend is bearish on short term and medium term also, right? So that is what we have to keep in mind. Volatility and open interest analysis. We see VIX had shot up around 50% last week and then cooled off a little bit. But again, now this 26% of up move happened today, this week, previous week. But it cooled off to 4% rise. After that big spike. When the war and nuclear threat and all this came, it spiked up 26% also last week also. Right? Big spikes in volatility is what is happening. Right? But as it stop, we never know. Right? Until the uncertainty is that VIX will also be shooting up. So, but basically it is a 4% rise only that happened finally end of the week. But even then it is a high level of 27 where it is closed. Right? So any spike that is about 20 has to be afraid of, but about 25 is what it is moving in, forming a new range near to 30 kind of. Right? You can see that this range is between 20 and 30 that you are seeing, 23 to 30. So 30 seems to be kind of a previous spike point, so there is a probability that it can now mean revert down. You never know, so you just can't predict when the mean reversion happens, when the spike ends. That spike could remain forever until the uncertainty is not it can shoot up to 80 levels, the pre-COVID levels, 88 kind of levels, 80 plus levels. It can go to anywhere, right? And so as long as uncertainty is there in the market, the fear and the greed index will keep on rising. So volatility will be high. It's very evident. It's 27 right now, very close to 27. Right? Now, open interest data, if you see, we'll be seeing that data here in the next slides. But overall, if you see that the futures open interest data is showing that it's a short build up, clearly it's bearishness. And Bank Nifty is showing long unwinding. Long unwinding is people who are long are now changing the stance to short. So that is also bearish. And Bank Nifty also open interest on the option on the futures. Now, options open interest data for the next expiry of March 10th, weekly expiry. We'll be seeing that in the next slides. You'll be seeing that the levels support resistance you can see. But put call ratio is also bearish. 0.47 for Nifty and 0.56 for Bank Nifty is very close to bearishness. And you can see that there's hardly any volume, hardly very few number of contracts can be clearly visible, but very high resistance on the means call writers are the heavy writing of calls are there, and very small put writing is same. So that itself clearly shows that it is market is bearish. Right? Now what are the levels? The levels are between 15,000 and 17,500. That's a 1,500 point range is what the put call writers and put and call writers are seeing. Right? Highest put is at 15,000, highest call is at 7,500. Now next level is 16,000 highest put and then 7,000. So 7,000 is the highest put call rate. So it's a highly volatile environment. Premiums should be high. Right? Writers are going to the far maximum possible range that is possible in the contracts. And futures open interest we already seen, so short bottom. Bank Nifty, the range we could see it's now increased, the volatility is increased. 33,000 is the highest put rating where it is. Highest call rating is at 37. So that is kind of 4,000 points. Previous to previous week, it was volatility is very less. In Bank Nifty, at least, there was a difference of only 1,000, 2,000 max. Now it is increased to 3,000 points range between the highest put rating and highest call rating. So 34,000 and 38,000 also has got highest put and call rating levels, support and resistance levels. Next, after the 33 and 37,000 levels, right? So making all of these levels and go and match them with the support and resistance levels, the gap resistance and all that we have seen earlier, right? So only you can take the positions and unwind the positions. Now, sectorial watch, if you see IT sector, so it is a mixed bag. So there is big up move that has happened in the metal sector, 7% up move. In fact, it went to 12% up move and then cooled off. So 7% metal shot up. Auto sector broke down 9%. So it's the other side. It's turned bearish, completely bearish all of a sudden. 9% of fall. So that is what exactly happened in the last week. One sector shot up, one sector fall down. Other sectors were all kind of IT sector moved up 2%, pharma sector moved 2.5% down, FMCG down, reality 4% down. Reality also had big fall. So IT sector, the problem is there is an inverted flag that is probably forming. So you have to be cautious if you're long, right? But momentum is clearly sideways on. So you just have to wait for the momentum to catch up in the short and medium term to be taking long positions for sure. So right, at least it is in sideways momentum. Metal has formed a very wide range bullish hand, but breakout is not sustained. Right? It broke out from that consolidation that is happening. We're seeing that slides here. So this is the metal that you're seeing here, the second one on the left. So it broke out but not sustained. So it has to close above this resistance zone before we can say there is bullishness there. Metal, right? So you have to still wait, even though it is momentum is on the edge, very close to the bullish zones, but still technically remains short term and medium term sideways only. So we'll have to wait. Now IT sector also sideways. Auto sector is down, bearish. We'll have to stay away. Pharma sector bearish momentum short term. FMCG bearish short term. Reality bearish short term. So auto, pharma, FMCG, reality all are down. Right. What is floating around is IT and metal turning towards bullish, but stiff resistance on the upside. That's it. Somebody you can clearly see that. Say IT sector on the top, and this is what I was saying. There is a chance of a breakdown, right? Because it's an inverted flag kind of formation. Metal, it almost broke out, but due to selling pressure again fall back. So you have to see a green close above this resistance zone. And auto, we can see that a big 9% gap down is what happened, but you have a supports down here. And pharma, it is also fallen off from the support zone and then clearly moving towards this bottom of support zones that you can see here. FMCG also broke down, right? It was a major support zone. It broke down for the last 2 weeks and then down there. Now reality is still hanging on. It was kind of, there is a support zone here that will form from. So reality is in the bull phase, bull cycle probably. So the slowdown is not that. It just broken out big, and the fall is not that great, but still it has slipped to the bearish zones and on the short term. So but it also it is slightly slipped to the bearish zones, you can say. But there is a major support down here, right? So that's the sectoral analysis. So as of now, as I said, metal seems to be bullish, but not at there. IT seems to be for consolidating sideways momentum. Also, it's all showing bearish momentum in the short term, right? Index aggregate, you can see that last week there was a big fall in the HDFC Bank that happened, but we have a very good supports on it, 1310, where it had done a small bounce up. It also trended down, right? So this is kind of a support zone, good time to buy, right? So it's very less likely that it can follow from here downside, right? Such a quality stock. But as of now, it is bearish. Probably buy on it is something that you can do in a SIP model, right? HDFC Bank. HDFC has broken down from the major weekly support zone, and then you can see that it is heading to the next support at 2217. Near to that, there is a support zone. If that goes down, then you have another support for the 954 kind of levels. So making note of these levels as well. Reliance Industries is showing bullishness on stock that is showing some bullishness and is forming a cup and handle in weekly, and you can see that it is a bullish candle, that green candle that closed last week, right? So something is happening in the Reliance which is keeping it green in spite of the market having a bearish cycle that's going on. And Infosys, you can see that consolidating, as I said, momentum is sideways. Reliance also sideways momentum. Lens and Infosys also sideways momentum. TCS is still within the channel on the weekly basis, and it is at a major support zone. It has taken a bounce from there. So it seems to be respecting this support from where it had broken out several months back, right? This may be the zone. It may be consolidating within this for some period of time before it take off. So that but the fact to note is that the support is working. Bottom is anyway sideways, and ICICI Bank can say it is also slipping off from a major support zone, and it is finding another support at the ascending triangle breakout zone where it had made a big up move earlier several months back. So that zone could actually support, right? So making out of that level, so basically ICICI Bank is a major support zone, and also the momentum is also the support zone, right? Although the trend is downside, it is major support zone is what it is, not at a resistance or not fully bearish on the medium term basis, right? Because there is a potential that it can bounce and take support from here, consolidate at least, right? Kotak Mahindra Bank is also taking a support, right? It is very close to a major support zone where it had tested multiple times, so there is every chance that it can bounce up from here or consolidate this level for spend some time there. Momentum is sideways on the weekly basis, right? But last week was very bearish on both their banks, ICICI Bank and Kotak Bank, right? So IT, it was kind of green moves that happened last week. 2% move in index itself we have seen. Reliance is an exception. It does not form any potential energy, come telecom kind of play. So there is another heavyweight which is not falling exactly under any of this sector. So bearishness is seen in the banks and housing finance, financial services sector, but Reliance and IT sector is hanging on there with some green closes last week. Yes, institutional participation. Look at this: the 27,000 crores of selling that happened within Fyers last week. And domestic institutions are trying hard to catch up with that. 21,000 of buying happened. Right? The selling of 27,000 crores is huge just in 5 days. That one day was a holiday. So it's 4 days of trading that happened last week, and this is the kind of selling that's happening. Something that is beyond merely getting concerned. It's clear bearishness and clear concern, clear threat to our markets going down. If this selling continues, but the positive thing is, institutions are ready to buy. The dips. Right? There's a lot of fund flowing in. The retail money is there with the institutions, and retailers are still optimistic on the economy, and that's the reason why they keep buying. So nobody would buy even if there is a, so there is always the hope that this is only a temporary war or no temporary issue that is happening. It's not really a major crash that's going to happen, and recovery is evident. Is that belief is there in the market, right? And the market participants, especially retailers who put in the money in the domestic institution. So they are buying it. That's what is causing the market not to crash. Otherwise, we would have long back gone and hit the 10,000 levels by now with the kind of selling that is happening from the institutions, right? So global markets, if you see US markets, again fell. Right, there was a 2 to 5% of falling that happened the previous week. Now it is 1 to 3% of fall. But all the indices like Dow Jones, S&P 500, we'll be seeing the charts here next slide. So Dow Jones, S&P 500, and Nasdaq, all of them, right, collectively 1 to 3% like that. It has fallen. But the thing is, making all of this, right, Dow Jones chart, you can see that it is not. It is bounced up ferociously from there and then closed above that. Again, it has fallen down because of selling pressure, nuclear war, and all this news, and then is still not ready to give up this major support zone. Something you have to keep in mind, right? And the same in the case of Nasdaq. It is well within the channel. It is having a support and still hanging on to that support. Almost given up. And what you see here is kind of a gravestone kind of bearish candle only. But you can see that there is immediate support downside here. So it from where it had bounced up. So Nasdaq also showing support. And look at this, S&P 500 just formed an inverted candle, and exactly it has formed at the support zone where it has tested multiple times. So the US market, the mother market, is not ready to crash in the name of what is the bearishness that is floating around because of the war news. The war has started since 10 days. Even then, the global markets, the mother market, US market, is not ready to give up to the bear. It shows excellent strength and support and belief in the market participants is what I would look at it, right? Now dollar index has closed 2% up, so dollar is strengthening. Dollar is shooting up like crazy. You can see that below. It it was at 91 kind of levels, just breaking out few months back, and now look at where it is hitting to 99 kind of levels in the US currency index. Dollar is strengthening, so obviously our market, our rupee will depreciate, and it will weaken. That's exactly what happening in the USD INR currency pair. If you see, it had shot up 1.5% up, and it is reaching $76.34 kind of levels. So you can see that it is a heavily bullish candle that happened the last week, right? Wide range bullish candle, almost at the edge of the channel top, and we are inches away from the COVID level 177 kind of levels. We are heading towards that. 76.3 for $1 is huge weakening of the rupee that has happened, and that is a real concern for the Indian markets, and not just markets, the currency. Clubbed with the crude oil, it's economic crisis for emerging markets like ours. Crude oil, that 23% of further happened, right? Look at the crude oil rate is 113. 115 is where the 11-year high crude oil is there. That is 2003 or something. That's a kind of momentum in which the oil is rising up because of the current war crisis that's globally happening. Now, the good part is good or bad depends on. So gold is actually has finally broken out. We have been telling that it's a cup and handle platform since almost 2 years after the downfall happened, the retracement, that correction that had happened. Now it is finally had a green close above the 1917 kind of levels, and 1969 is what is, and it is heading towards the 2074 kind of the next resistance, right? So that is something that can be definitely used as a hedge positions to cover our long-term investment options, right? So that's it. Crude and oil. And crude oil and the dollar strengthening and rupee weakening factor is not good for the markets, unless this uncertainty goes off sooner. Now, two picks is one is the gold Bs is a good pick. It can be a hedge position also. You can buy for as much as your investments at their equivalent amount, and then have a fixed levels where you have to get out of it, right? But as long as the market is going down and corrections are buying, and walk over an uncertain crisis is there, because people keep buying gold and gold prices will keep shooting up, right? Even if you get 5 or 6 points, and that will be a good hedge, and that will give you make up for these losses that may happen in your long-term investment, which you do not want to get out of at this point because of this uncertainty whether so it's basically a bullish market. We are not turned into a bear cycle yet, right? So until that happens, right? And if at all that happens, this will be a good play to do. So Nifty Bs is one. Its reason is high volume and price, high momentum, high trend. And Gujarat Narmada Valley is breaking out. It is given a close above the rounding pattern breakout. Good volumes, good momentum, good trend, and pattern rounding breakout is clear confirmed. This is a weekly chart suggesting. So they can give swing trades, positional good long, right? And the pattern is very nice, and clear bullishness can be seen, straight away from the charts. And yeah, keep the neckline as a stop loss, right? If you're out, then you stopped out means well and good. We can always have a re-enter once a confirmation from the candle trend is coming in. You can again re-enter, but overall it's bullish, man. Volatility could be there. Now this is a good actionable on the index trading, options trading strategy. It's giving reasonably okay risk reward as long as you give on 2 to 3% maximum target, and probability of profit is very good, 85.15. The break even range, 15,400 and 17,200 is the range that we are getting, right? It's very unlikely that in a week's time, 4 days, not even a week's time, 4 days, it's not possible to break this kind of range. It may not happen, right? So 15,500 could be a very good support zone. 15,600, 500, we have already seen that in the charts, and 17,000 would be very difficult to crack, right? So that's kind of a very high probability that you can get this trade as long as you are able to get this on Monday. If you're taking the trade, ideally it should have been taken on Friday itself. But if you are able to manage to get this at this price points that is put in here, then this could be a good trade, right? It's basically a double diagonal spread, very good range, and POP, probability of profit. Yeah, so this is the same Nifty BANKNIFTY charts that is put in a different way. It is clearly seen that there is bullish momentums, and it is at a support zone. There is a trend line channel. There is a 50 DMA. There is a Fibonacci 61. There is a Fibonacci 61. So M pattern. All this visible once again. Keeping that in mind, we'll wrap up. So markets steadily falling in a trend line channel, clearly below the 200-day moving average, 200-day moving average. This is 50 moving average. So and it is having a weekly double top. It's a volatility breakdown on it's a volatility breakdown that has happened. Momentum and trend indicators are showing are sliding down the bear zones. Although there is some divergence possibilities are there, CIP possibility, all this is there, but overall the charts are saying that the momentum is bad, trend is bad on the short term. That trend is bad on short and medium term. Double top potential is there, right? Support zone is there, but volatility is broken down. So overall, clearly charts are saying I am bearish. So that's my view. It's going to be bearish, even though there is possibility that it can bounce from here, possibility that it can consolidate. If the war is tomorrow declared to be over, then it can be a big bounce. Something can happen. You never know that, but as of now, what charts is saying is what technical analysts has to look at. CEO's market charts also we have seen that it is bearishness that is there, selling pressure is there, but it is still maintaining that support zone is what we have to. Uncertainty is there still. It is kind of volatile moves are happening, but still serious inflation, Fed interest rate hike, Russia crisis, oil crisis, rupee weakening. All this combined is fundamentally also you can see that there is sort of bearishness. Chart wise also it is reflecting the same, the short term, right? And the positive factors you can see that you can see that 27,000 crores of selling happened from the Fyers in 1 week, 4 days with one more day, and almost 21,000 crores of buying happened from the domestic institution side. That means retailers are still hoping that the market is not going to crash, it is going to move up. That is a strength that you see in the charts, right? Now Bollinger Bands, it should be definitely it's clearly showing that the volatility. It is not sideways. Bollinger Bands on the weekly may be sideways, but medium term may be sideways, but But the bands clearly showing that it is bearish zones. It's not sideways. It's a mistake here. It's meant, what is meant here is a weekly. Right? So India VIX levels are beyond 25, 20 levels is something that we are, indicates the fear in the market. So when there's fear in the market, people will sell and buy at random, very big spikes and reversals, and losses at both sides. If you're playing options, all this can happen. So you have to either stay away from the market until it cools off, or play it safe with hedge positions. And so basically, options traders can do multiple things. One is reduce the position size. That itself will save your capital. You have capital when the market cools off. Second is, have the positions taken at a range which is very wide, so that the DK benefits also comes in, and then the delta moves will not work against you when there is a high volatile environment, right? So overall, always use spreads, either vertical spreads or non-directional trades, options strategies. Always take overnight positions has to be hedged. You have to know the risk defined before you take the trade, so that you don't have a surprise of your capital getting wiped out. Never. Right? And intraday trades, it's very difficult to trade because of the volatility. To keep price action close with the price action levels, pivots, and all that, and have tight stop losses. Right? The moment you see and observe the candles, and if there is a reversal that's happening in the candlestick patterns, that's the moment you have to come out of it. So price action trading would be the only way it can work, rather than indicators, right, for the intraday trade, right, with tight stop loss, right? So market view is bearish for sure, and as I said, there are possibilities of reversals that is also seen, right, and there is a big negative volatility moves that is happening in the market, so you have to be cautious at the same time. So if this market view analysis helps you to frame your own market analysis and your own market view and your own trade plan, then consider hitting the like button and share it to maximum. We have very few subscriptions, and your subscriptions will help us motivate, keep doing this in the future also. Thanks for watching. Happy trading, happy learning. Bye.